Question 1. When faced with a sudden increase in customer claims following a major storm event, how should Midwest Mutual Insurance Company apply the principle of indemnity while handling business income losses for multiple commercial clients who suffered operational interruptions? A. Pay clients an estimated projected profit regardless of policy terms. B. Offer a lump sum goodwill payment for all affected policyholders to avoid litigation. C. Pay only actual documented lost net income and ongoing necessary expenses as defined in the policy. D. Reimburse clients based on the average industry earnings for similar businesses in the area. Answer. Correct answer. C. Explanation. The principle of indemnity ensures the insured is restored to their pre-loss financial condition without profit. Under business income coverage, as OCP 030, insurers must cover actual loss of business income sustained due to suspension of operations caused by a covered peril along with necessary continuing expenses, arbitrary or goodwill payments as in options, and B. Violate contractual terms and average industry income. Option D. Lacks individual proof of loss, conflicting with NAIC model regulations and Nebraska DOI guidelines on fair claims settlement practices 210 NEP. Admin, Code CH 60. Question 2. In light of recent developments, what is the most appropriate action for Agent Rebecca if she discovers that a prospective commercial client is intentionally underreporting payroll to reduce their workers' compensation premium? A. Ignore the discrepancy as long as the application is signed. B. Report the suspected fraud to her managing general agent but continue processing the application. C. Notify the Nebraska Department of Insurance and refuse to submit the application. D. Submit the application with note about the discrepancy to preserve the sale. Answer. Correct answer. C. Explanation. Under NEP Everenstat SS446606 and the Unfair Trade Practices Act, knowingly assisting or overlooking material misrepresentation constitutes insurance fraud. Agents are required to report suspected fraud to authorities and refrain from participating. Continuing with the application B. D could expose the agent to liability. Even signed application A doesn't exempt an agent from ethical and legal responsibilities. The Producer Licensing Act mandates adherence to fiduciary duties and ethical standards. Question 3. Given the circumstances of a commercial tenant fire claim, what would be the insurer's obligation under the legal liability coverage of commercial property policy if the tenant negligently caused damage to the landlord's building but the lease did not require the tenant to insure the structure? A. Decline coverage because the lease omits insurance obligations. B. Pay damages only if the tenant admits legal liability. C. Cover the landlord's damages under the tenant's legal liability coverage for fire. D. Deny coverage since property coverage is limited to the tenant's contents. Answer. Correct answer. C. Explanation. Legal liability coverage, part of OCP 040, covers property of others damaged by negligence of the insured, particularly fire. Legal liability, even in absence of express lease provisions. The lease's silence does not negate statutory liability or policy language. Nebraska follows comparative fault statutes, and insurer obligations arise from policy insuring agreements, not just clauses. Option A, B, and D disregard the contractual and tort basis for legal liability. Question 4. Which of the following would best illustrate a morale hazard in commercial insurance underwriting? A. A business owner purchases duplicate insurance to maximize potential claims. B. An employee fails to activate the security system because they assume losses will be covered. C. A contractor lies about prior losses to secure better terms. D. A company files a false claim for inventory it never owned. Answer. Correct answer. B. Explanation. Morale hazard refers to indifference to risk due to the existence of insurance. Option B captures this attitude. Option A is moral hazard, intentional manipulation. Option C involves fraudulent misrepresentation, and D is outright insurance fraud. According to NAIC's Guide to Risk Management and Nebraska's definitions under 210 NAC Chapter 60, morale hazards affect underwriting because they lead to careless behaviors, not necessarily malicious intent. Question 5. To illustrate this point, consider the scenario where Mr. Alvarez, a licensed Nebraska insurance producer, learns that one of his clients, who owns multiple restaurants, was rejected coverage for flood due to being in high-risk FEMA zone. What is Mr. Alvarez's best course of action under Nebraska's regulatory framework? A. Advise the client to cancel their current coverage and wait for seasonal rates to drop. B. Refer the client to the Nebraska Property and Liability Insurance Guarantee Association. C. Recommend the client apply for coverage under the National Flood Insurance Program NFIP. D. Suggest self-insurance to avoid high premiums. Answer. Correct answer. C. Explanation. The NFIP managed by FEMA provides flood insurance in high-risk areas where private insurers decline coverage. Under NFIP guidelines and endorsed by the Nebraska Department of Insurance, agents are expected to inform clients of these public options. Options A and D do not meet fiduciary duty and expose the client to risk. Option B is incorrect because the Nebraska Guarantee Association protects against insurer insolvency, not high-risk underwriting decisions. Question 6. Among the various coverage forms for commercial crime insurance, which scenario would best be addressed by the computer fraud coverage form? A. A terminated employee steals physical inventory from the warehouse. B. A hacker gains remote access and transfers client funds to an offshore account. C. A cashier accepts a counterfeit check during a high-volume sales period. D. A bookkeeper alters printed payroll checks to divert funds. Answer. Correct answer. B. Explanation. The computer fraud coverage form CR07 addresses unauthorized transfer of money via computer systems. Cyber intrusions are specifically covered under this form. Employee theft. D falls under employee dishonesty coverage. Option C is handled under forgery or alteration or money orders and counterfeit paper currency. Nebraska adopted the NAIC commercial crime program with endorsements aligning coverage with evolving tech risks. Question 7. During the process of claim evaluation, an insurer discovers that is Gina's commercial auto policy lists symbol 7 on the declarations page. What is the practical implication of this symbol designation regarding coverage? A. Coverage applies to all autos the insured owns, hires, or borrows. B. Only autos specifically listed in the policy are covered. C. Coverage extends to any auto operated by employees. D. Coverage applies only to private passenger autos, not trucks or vans. Answer. Correct answer. B. Explanation. Symbol 7 means coverage is restricted to specifically described autos as per the Business Auto Coverage Form ISO 01. This is commonly used to limit exposure. Symbol 1 equals any auto. Symbol 9 equals non-owned autos. Misinterpretation can lead to denied claims, making understanding symbol designations crucial. Nebraska recognizes these designations as material terms, and designation can violate statutory duties under NEP, Everend Stat. SS 441525. Question 8. A critical examination of builder's risk coverage reveals which of the following is key limitation? A. It excludes theft of building materials from the site entirely. B. It cannot be purchased by contractors. C. It only covers buildings once the roof is installed. D. It ceases coverage when the project is completed or accepted by the owner. Answer. Correct answer. D. Explanation. Builders' risk policies typically terminate upon completion, occupancy, or acceptance by the owner, as per as OCP 020 or custom manuscript forms. Option D reflects this. Termination of coverage clause. Materials theft. A. May be covered if listed. Contractors. B. Often unnamed insureds. And the policy is in effect during all construction phases, not just after roof-in. C. Nebraska follows standard industry provisions with filing approval via the DOI. Question 9. From a practical standpoint, how does reinsurance affect the solvency of commercial insurers operating in Nebraska? A. It increases the insurer's exposure to catastrophic losses. B. It allows the insurer to avoid licensing requirements. C. It transfers part of the insurer's risk, reducing the chance of insolvency. D. It replaces the need for the insurer to maintain statutory reserves. Answer. Correct answer. C. Explanation. Reinsurance involves one insurer transferring risk to another, spreading potential losses. It stabilizes earnings and protects solvency, critical under Nebraska's solvency monitoring under NEP, Everend Stat. SS442011. It doesn't exempt licensing, B, or reserve obligations, D. Instead, it supports risk-based capital requirements and regulatory compliance. Catastrophic risk retention is mitigated, not increased, by reinsurance contracts. Question 10. According to recent studies on market conduct examinations, what is the most common violation found among commercial insurance producers in Nebraska? A. Offering premium rebates to secure business. B. Failing to maintain an office in every county served. C. Underwriting clients without physical inspections. D. Selling insurance across state lines without dual licensing. Answer. Correct answer. A. Explanation. Rebating, offering anything of value not specified in the policy, is violation under Unfair Trade Practices Act (NEB) ever in stat. SS441525. It distorts the competitive landscape and is frequently cited in market conduct exams by the Nebraska DOI. Options B, C, D are either not regulatory requirements or apply to broader interstate issues. The Nebraska DOI publishes annual reports listing rebating as top violation in producer investigations. Question 11. By evaluating a commercial insurance claim where is Jensen owner of, a small publishing company experiences a significant cyber breach exposing client data, which coverage would most directly respond to the legal liability and costs associated with the breach, A. Commercial general liability (CGL). Personal and advertising injury coverage. B. Professional liability. Errors and omissions. C. Cyber liability insurance. D. Business owner's policy. Special form endorsement. Answer. Correct answer. C. Explanation. Cyber liability insurance is specifically designed to cover the costs of data breaches, including notification, credit monitoring, defense costs, and regulatory fines. The CGL Policy A excludes electronic data breaches under the Electronic Data Exclusion. EOB applies to professional negligence, not data exposure. The BOP D might offer minimal data compromise coverage but is insufficient for major breaches. Under Nebraska privacy regulations, Title 210, Chapter 64, insurers must offer appropriate protection against cyber exposure. Question 12. During the process of a commercial general liability (CGL) claim review, the adjuster notes that the business has a claims-made form. What is the main difference this presents compared to an occurrence form in terms of coverage? A. The claims-made form covers any claim regardless of when the loss occurred. B. Coverage only applies if both the incident and claim fall within the policy period. C. Coverage applies as long as the loss occurred during the policy period, regardless of when it is reported. D. The claims-made form offers unlimited retroactive protection by default. Answer. Correct answer. B. Explanation. A claims-made form requires both the incident and the claim reporting to happen during the policy period or extended reporting. In contrast, an occurrence form covers events that happen during the policy, even if reported later. Retroactive coverage, D, is optional, not automatic. Nebraska recognizes the importance of extended reporting periods, ERPs, and retroactive dates under OSCG form language. Question 13. Through careful analysis of Nebraska law, what action is considered an unfair claims practice by a commercial insurer? A. Denying a claim after thorough investigation. B. Requesting additional documentation before making payment. C. Misrepresenting policy provisions to avoid a claim payment. D. Reserving rights to investigate a suspicious claim. Answer. Correct answer. C. Explanation. Under Nebraska Unfair Claims Settlement Practices Act (NEB) ever in stat. SS441540, misrepresenting coverage to avoid payment is prohibited. Options A, B, and D are permitted and often required for due diligence. Misrepresentation undermines consumer protection and regulatory transparency and may result in administrative penalties or license revocation. Question 14. In contrast to traditional forms of property valuation, what is a defining feature of the stated amount valuation method in commercial property insurance? A. It pays the full replacement cost regardless of depreciation. B. It requires the insured to carry 100% of property value. C. It allows the insurer to adjust the payout based on current market trends. D. It limits recovery to a pre-agreed amount regardless of actual loss. Answer. Correct answer, D. Explanation. The stated amount method sets a predetermined limit agreed upon by the insured and insurer. It can cap the payout potentially below actual replacement cost. Unlike replacement cost (RC) or actual cash value (SCV), this method benefits businesses that want low premiums but accept low payouts. Insurers must maintain signed statements of value (Parazzo CP 9910) endorsement and regulations. Question 15. Examining the consequences of adverse selection. Why is it a concern for commercial insurance underwriting? A. It results in lower overall claims and profitability for insurers. B. It attracts healthy and low-risk businesses who file fewer claims. C. It leads to disproportionate claims from high-risk applicants. D. It ensures a balanced risk pool across industries. Answer. Correct answer, C. Explanation. Adverse selection occurs when high-risk entities are more likely to purchase or maintain insurance than low-risk counterparts. This skews the risk pool, leading to higher-than-expected losses and premium insufficiency. Nebraska insurers address this through underwriting criteria, loss history analysis, and pricing segmentation as authorized by Nebraska DOI underwriting regulations and NAIC risk classification guidelines. Question 16. While it is true that contractors' equipment floaters cover mobile machinery, which of the following would typically be excluded under such a policy unless specifically endorsed? A. Equipment rented from others. B. Tools and machinery used on multiple job sites. C. Employees' personal tools. D. Newly acquired equipment after the policy start date. Answer. Correct answer, C. Explanation. Contractors' equipment floaters on 9132 cover own machinery and large mobile equipment but typically exclude employees' personal tools unless endorsed. These exclusions are consistent with ISO inland marine forms. Rented or newly acquired equipment may be covered under automatic acquisition or with rental reimbursement endorsement. Nebraska follows nationwide marine definition and form filings for compliance. Question 17. The development of commercial general liability (CGL) endorsements includes which of the following as a method for extending protection to third parties contractually involved with the insured's operations? A. Workers' compensation rider. B. Additional insured. Blanket endorsement. C. Drive other car endorsement. D. Commercial crime. Inside premises endorsement. Answer. Correct answer, B. Explanation. The blanket additional insured endorsement (CG 2033) automatically provides third-party coverage when required by a contract or agreement. It reduces administrative burden and ensures third parties, like landlords or general contractors, are protected. This practice complies with risk transfer best practices and contractual liability provisions in Nebraska's standard commercial insurance policies. Question 18. Taking into account the principle of insurable interest, why would a business partner not be eligible to collect insurance proceeds from damage to property solely titled in the other partner's name unless specified in the policy? A. Insurable interest is automatically assumed between partners. B. The business relationship itself guarantees payout eligibility. C. The policy must name the party with the legal and financial interest in the property. D. Insurance law allows retroactive correction of insured parties. Answer. Correct answer, C. Explanation. Insurable interest is based on a party's legal or financial stake in the subject property at the time of loss. It is not assumed based on personal or business relationships. To collect, partner must be named insured or additional insured. Nebraska follows this under NEB Ever and Stat SS 44103 and standard ISO policy requirements which emphasize clear declarations of interest. Question 19. Upon closer examination of groundkeeper's coverage under a commercial auto policy, what exposure is most accurately addressed by this endorsement? A. Injuries to employees working on customer vehicles. B. Damage to customers' vehicles while in the insured's care for repair or storage. C. Loss of business income due to closure of the auto repair shop. D. Damage to the insured's own fleet of autos due to vandalism. Answer. Correct answer, B. Explanation. Garagekeeper's coverage ISO 9937 applies when a business is legally liable for physical loss to customers' autos in its care, custody, or control. This is common in auto service industries. It fills the gap not covered under standard liability or property forms. Nebraska mandates appropriate disclosures for bailey exposures under these commercial policies. Question 20. With respect to unfair trade practices, which of the following marketing actions would likely lead to regulatory sanctions under Nebraska insurance laws? A. Offering a $25 gift card to a prospective client with a quote. B. Comparing competing policy benefits using factual brochures. C. Recommending insurance products based on client needs analysis. D. Offering a discount on policy fees as allowed under insurers' filed rates. Answer. Correct answer. A. Explanation. Offering rebates or inducements not specified in the policy is prohibited under the Unfair Trade Practices Act, NEB Everenstat. SS 441525. $25 gift card. A. Constitutes an unapproved inducement. Comparisons. B. Suitability. C. And filed rate discounts. D. Are allowed under regulated marketing standards, assuming compliance with disclosure and documentation. Question 21. A detailed analysis of the builder's risk policy issued to Rains Development LLC reveals that a newly constructed restaurant sustained water damage after the sprinkler system failed during testing. Under which condition would this damage typically be covered? A. Only if the sprinkler system was pre-approved by the fire marshal. B. If the loss occurred during the active construction period and not due to contractor negligence. C. If the policy included ordinance and law coverage. D. Only after final inspection and issuance of the certificate of occupancy. Answer. Correct answer. B. Explanation. Builders' risk policies typically cover physical damage during the course of construction, including accidents like sprinkler system discharge, unless due to excluded causes, e.g. negligence, wear and tear. The policy ceases upon completion, occupancy, or acceptance. Option C refers to code upgrades post-loss. A and D are unrelated to coverage triggers. Parazzo CP 020 and Nebraska DOI form filings. This would fall under cover property loss during ongoing construction. Question 22. From multiple perspectives, how does the concept of insurable risk apply to a company wanting to insure its expected future profits from a product not yet launched or tested in the market? A. It qualifies as insurable because it has financial value. B. It is insurable as long as the company can project potential earnings. C. It is not insurable due to lack of measurable loss or certainty. D. It is covered automatically under a business owner's policy. Answer. Correct answer. C. Explanation. Insurable risks must meet characteristics such as definite loss, measurable value, and accidental occurrence. Expected profits from untested products fail to meet these criteria. Nebraska law aligns with NAICS standards requiring that insurable interest must be based on existing financial relationships and tangible risk exposure. Option A and B misrepresent the risk evaluation criteria. D is incorrect because BOPs do not cover speculative income. Question 23. When evaluating the merits of insurable interest, why would a mortgagee retain the right to payment under a commercial property policy even if the insured landlord violated a condition of the policy? A. Because the mortgagee is a named insured and shares liability. B. Due to the mortgagee clause protecting financial interests regardless of the insured's actions. C. Because the mortgagee must always co-sign any commercial insurance policy. D. If the property is held in joint tenancy with survivorship rights. Answer. Correct answer. B. Explanation. The mortgagee clause, standard in ISO CP 010, protects a mortgagee's right to recover even if the insured violates policy terms, provided the mortgagee was unaware and compliant. It separates the mortgagee's insurable interest from that of the insured. Nebraska follows this through lien holder protections and the insurable interest doctrine under NEB Everenstat SS 44103. Question 24. The effectiveness of the commercial umbrella policy depends heavily on which of the following structural features: A. Coverage for property damage to the insured's own equipment. B. Elimination of all exclusions from the underlying policies. C. Provision of excess liability limits above primary policies. D. Automatic coverage for any new business operation. Answer. Correct answer, C. Explanation. A commercial umbrella policy provides excess liability protection above underlying policies like CGL Auto and employer's liability. It sometimes includes drop-down coverage for uncovered claims, but only after a self-insured retention. So option A misrepresents liability versus property coverages. B is false. Umbrella policies often have their own exclusions. D requires endorsement or notification. Nebraska follows NAIC umbrella guidelines, and filings must comply with Nebraska DOI approval. Question 25. With the advent of stricter cyber liability exposures, what is one key distinction of the claims made and reported to form in cyber liability insurance? A. It covers any loss that occurred regardless of when it's reported. B. Coverage applies only if the loss occurred during the retroactive period and is reported within the policy period. C. It automatically provides perpetual coverage after the policy ends. D. It does not require a retroactive date to respond to prior acts. Answer. Correct answer, B. Explanation. Claims made and reported policies require both the event and reporting to occur within the policy or extended reporting period, and coverage is limited to losses after the retroactive date. These are common in cyber liability insurance where losses are discovered after occurrence. Nebraska recognizes the importance of retroactive date clauses for professional and cyber coverages. Options A, C, and D incorrectly describe occurrence form or perpetual policies, which are not typical here. Question 26. To better understand premium development, which of the following most directly influences commercial property insurance rates under Nebraska regulation? A. The insured's credit score and age. B. The property's replacement cost, construction class, and occupancy. C. The size of the business's marketing budget. D. The zip code of the insured's accountant. Answer. Correct answer, B. Explanation. Premiums are based on underwriting factors like construction type, occupancy, protection class, and replacement cost value. These reflect the risk of loss and are authorized under filed rating manuals approved by the Nebraska Department of Insurance. Credit scores, A, are controversial and not always permitted. Marketing budgets, C, and zip codes unrelated to the risk, D, are not considered legitimate. Factors under rate regulation statutes. Question 27. During the process of renewing her commercial auto policy, Priya adds a new delivery van to her business fleet. The declarations page shows Symbol 1 coverage. What implication does this have for the new van? A. The van is automatically covered because Symbol 1 applies to any auto. B. Coverage only applies if the van is scheduled in the policy endorsements. C. The vehicle is covered but only for physical damage losses. D. Coverage only begins after the van is physically inspected. Answer. Correct answer, A. Explanation. Symbol 1 means coverage applies to many auto, including newly acquired, hired, or owned vehicles for liability coverage. This broad symbol provides the greatest protection. For physical damage, separate symbols and endorsements may be required. Nebraska aligns with ISO 01 form designations, and coverage begins automatically for qualifying autos if Symbol 1 is used. Options B, C, and D misunderstand this designation. Question 20. Given the scenario where Mr. Donnelly owns a bakery and rents equipment from a third-party supplier for seasonal demand, which inland marine form would best respond to loss or theft of this equipment? A. Accounts receivable floater. B. Contractor's equipment floater. C. Installation floater. D. Equipment dealer's floater. Answer. Correct answer, B. Explanation. The contractor's equipment floater, while traditionally used for construction, also covers rented and mobile equipment used temporarily by businesses, including food services if endorsed. This form allows protection beyond fixed location property. The equipment dealer's floater, D, is for inventory, not rentals. Installation floaters, C, apply to items being installed. Accounts receivable, A, is for loss of receivable data. Nebraska inland marine forms follow the nationwide marine definition standards. Question 29. Contrary to popular belief, what is the correct application of the coinsurance clause in a commercial property policy? A. It limits coverage to 50% of the loss, regardless of actual values. B. It eliminates the deductible when the insured value is met. C. It penalizes the insured for underinsuring based on a percentage of replacement cost. D. It provides an automatic increase in limits each year without endorsement. Answer. Correct answer, C. Explanation. The coinsurance clause requires the insured to carry a minimum percentage, e.g., 80% of the replacement cost or SP to avoid a partial loss penalty. It promotes proper insurance to value. If underinsured, recovery is reduced proportionately. Nebraska requires agents to explain this under educational and disclosure obligations per Nebraska DOI standards. Options A, B, and D misrepresent this clause's purpose. Question 30. Scholars have debated whether certificates of insurance clause carry binding power. What is their true legal effect under Nebraska insurance law? A. They are legally binding proof of coverage and policy guarantees. B. They extend policy terms to third parties automatically. C. They are informational only and do not alter policy coverage. D. They override policy exclusions if issued by an agent. Answer. Correct answer, C. Explanation. A certificate of insurance is a summary of coverage, not a binding contract. It cannot alter or extend policy terms. Misuse, especially to mislead third parties, can lead to disciplinary action against agents. Nebraska follows ACORD standards and DOI regulations, explicitly stating that QA cannot grant rights beyond the policy. Options A, B, and D falsely suggest clause carry contractual force, which is legally incorrect.